Hi everyone, welcome back to Be Rich. Continuing on our series of how to invest, where to invest, I thought today we will talk about what are caps. We always hear about Anand talking about large cap, medium cap, small cap, that this cap gives better returns in the short term, that cap gives better return in the long term. How does this capitalization work? What is a cap? How is it defined? And how are these classified? So, Shashwath, what is a cap?
So you have three main classifications, and all of these classifications come from a concept known as market capitalization. And for those of you who want a more clear definition of what market capitalization means, is that a company has a certain amount of outstanding shares, and these shares are multiplied by the price at which it is trading on the exchange. And then you multiply the price it's trading on the exchange with the amount of shares outstanding, which tells you that this is the market capitalization of this company. If I were to sell all the stocks of this company in the market right now, it would be priced at this amount of rupees. That is what market cap tells you. Beware, market cap does not mean if you go out and sell 10,000 shares of the same company immediately, your market cap will not fetch you the same this thing. What it only tells you is that it technically, theoretically, at this price, if the price were to be constant and I was able to sell it, that would be the market capitalization.
It's a snapshot.
It's a snapshot. It's not a guarantee of any kind. So coming down to what the small cap, mid cap, and large cap. Let's look at large cap. So your large capitalization companies are your ITCs, your Reliance, your Infosys. These are companies with a market capitalization of over 20,000 crores. And these classifications have been taken out of a piece written by Kotak Securities. And so the classification is that for a company to be large cap is to have a market capitalization of over 20,000 crores. So these are your blue chip companies, so to speak, and these have high liquidity, and these have a lot of financial institutions investing in them, and you'll see a lot of foreign investors also investing in these sort of companies. And these are the companies which are your titans of India as you speak. These are your top 10 companies in India, and the Nifty 50 also consists of a large amount of them. So these companies are risk sort of better in terms of risk management, although it's not a generalization, because a lot of companies have individual levels of debt and all of those other factors. But in general, large cap companies are seen with more favorable eyes than mid cap and small cap. And large cap, the advantage is there's a lot of liquidity. That is, if I wanted to sell my ITC stock today, I might have what, 10 ITC stock, 100 even, let's say 1,000 ITC stock. In a matter of day, I can dispose of 1,000 ITC stock just like that without anyone batting an eye. No one's going to come and be like, why are you dumping all these ITC stock? None of that is going to happen. So there's a large amount of liquidity when it comes with large cap. This is an advantage for big players who are, your Mirai Asset Fund and all these guys who have a lot of crores and crores of money which they want to pour into something. The only place you need a well or a pot which can take in all that money. And large cap says, I will give you that pot of that size, and you can pour in your money into that. So that's the advantage of large cap. And large cap companies also tend to have more transparent balance sheets because there's a closer eye which is being kept on them because foreign investors are investing in it. Now, let's come to mid cap. Mid cap are companies with a market capitalization of 5,000 crores or more and until 20,000 crores. Above that, that becomes a large cap. So mid cap companies are neither here nor there, and these companies tend to be ones which were startups before or were new companies or spin-off ventures from known brands. So your LIC healthcare company comes under this, and your lot of other smaller spin-offs,
Subsidiaries.
yes, subsidiaries of large cap companies end up coming into this category where they're not as big as their parent, nor are they too small to be considered a small cap. And these are companies where you as an investor are primed to invest in, and they are able to reap the benefits of both it being smaller than your large caps but bigger than your small caps. So this is a sort of Goldilocks zone where you can pick certain companies which have transparent balance sheets because they're from reputed parent companies, and find them trading at lower PEs, and you can sort of snag them at great prices, and you have some of the advantages of large cap and some of the advantages of small cap. Then again, mid cap is neither here nor there. It's not giving you perfect valuations, nor is it giving you perfect transparency. So you can look at it both ways. But that's mid cap for you. And finally, coming down to small cap. Small cap is where a lot of money is made by small time investors like us. Small cap basically says any company with a market capitalization below 5,000 crores. And there are a lot of them in India,
Many,
and
many.
many companies such as these in India. And the thing with these companies is there are so many of them that a lot of the time the balance sheets may not be very transparent. So you don't know what's going on in the company, and that's why you have to be very careful when you're looking at small cap, and why most mutual funds, if you look at the risk rating, if it's a small cap fund, you'll see the risk rating being much higher, because you don't know how small cap performs over the long run, and you don't know what you see is not what there is, in the sense that there are many other things underlying which are going on with small cap. And small cap also has low liquidity. So if you wanted to dump 1,000 shares of a small cap company, you need someone on the other side saying, I'll buy that from you. And if there's no one on the other side saying, I'll buy that from you, you will tank the price of the stock. And what you'll end up seeing is that your portfolio value will also tank if you place a large order like that, which is why a lot of your brokers end up telling you to be very careful with small cap. And on the flip side, it's also true that a lot of the money is made from small cap, but I'll let him take over that.
Yeah. The small cap, medium cap, large cap is like analogy would be like seeing cricket player. So small cap is cricket players. There's lots of them in India who are not professional as yet. You'll see them playing for schools. You'll see them playing in city level, district level, state level. These are all like all small caps. Then you slowly reach from small cap to when you come to medium cap. These are the guys who are playing the Ranji trophies. They have not made into the Indian team as yet. They're still, some of them are making into the IPL. They're making some money. Some of them are, trying to get their feet into the Indian cricket team. They're playing in state level. They're playing in Ranji trophies. Then you get on the large cap, which are our Dhonis,
Yeah.
our Kohlis. Okay, so as you see, it's like a pyramid. At the bottom of the pyramid, you have lots, but it's very hard to see who's going to be the guy. You cannot go, if I take you out and show you a plethora of cricket players playing state level or school level and say, now who's going to be the next Mahendra Singh Dhoni? You will not be able to point him out. You say, sir, I don't know. No. So that's the same problem. You cannot predict which small cap is going to become a large cap in 10 years' time, 15 years' time. Because all large caps, believe it or not, started as a small cap at some point of time.
Yes.
There is no company that immediately launches as a large cap. It's not the way it works. The way it works is they all start, they have an idea, he comes, tells you the story as looking for investors, he's telling you the story, he launches an IPO, you as an investor believe in a story, you give him money, and there it starts from being a small cap going all the way to large cap. The advantage in a small cap is if you're a long-term investor, if you're a guy who's not looking for a quick return, it is the place to be. If you do your evaluations correctly and you place your bets correctly, there is a huge potential of making multi-crore returns, multi-bagger returns, as I say, from investing a small lump sum. And within a matter of 10, 15 years, when that becomes a large cap, where you reap tremendous benefits. Anand has spoken lots of times about when my father subscribed for Reliance, when my father subscribed for Infosys. All these were small caps, believe it or not. Now they're huge companies. This is very true with all our current crop of small caps. So you have to choose carefully. Where are you? How much returns do you want to make? Where should your money be? The safest place, yes, is large caps.
They're already there.
Because they're established. If you're a kind of investor who wants to invest and forget about it and just whatever I make 10%, 12%, I'm happy over 10-year period of time, then be in large caps. Don't go to medium caps. Do not go to small caps at all because you do not have the bandwidth to look at your investments.
Or the risk appetite.
Yes. But if you're a kind of investor who's always interested in reading what's happening in business, what's happening in markets, what's happening geopolitically, you keep abreast of this and you're logging on once a month at least into your portfolio app, then do invest in small cap. And you have an appetite for risk, dive in. Because your return growth can be something phenomenal. If you place your bets correctly, you can see some phenomenal opportunities. This is the main thing between small cap, medium cap, and large cap. In medium cap, they do not, like Sashwath said, the jump from small cap to large cap happens quite fast. They don't stay in the medium too long, in the Goldilocks. The companies which are there sitting in medium cap for a long time are the ones who are subsidiary companies. which have been launched by a Tata, which has been launched by a Reliance. Because when these companies launch, they cannot float a small cap. The flotation itself will happen, it will happen on a medium cap because it's so big.
Yes.
The child is so big. It's like a child of a giant. You cannot expect a small Lilliput to come out.
Yeah.
So it will be a giant. But they will move slowly also become a large cap on their own right. Or they consolidate. Sometimes what will happen is they launch it as a spin-off, then suddenly they'll rejig and they'll consolidate. When market conditions are different, they'll consolidate. But as an investor, you always stand to gain because they give you shares in trade and cash in trade. So these are the ways to think about small cap, medium cap, large cap. You can add in your views, Sashwath.
Yeah, and finally, as it comes down to it, it doesn't. Yes, all this matters, but finally, what does matter is your analysis, your prudence in investing, the price in which you enter, the price in which you get out. All of these things matter, and the time which you have to invest also matters. And these are the most important factors, not whether it's a small cap, mid cap, or large cap. You can make a lot of money in large cap, you can make a lot of money in mid cap, as much as you can make in small cap. The only thing is that the path through small cap is sort of something which you have to pave on your own. No one can pave it for you, and it's very personal and different for each individual. So that's all I have to say about it.
Yes. So we wish you all of the best of luck in your investment ventures in 2023. Hope you have time to analyze on what you're picking and choosing to do. As Sashwath said, if you don't have the time and you don't have the energy to analyze, please do not invest in equity like this. Continue sipping, as we spoke in one of our other videos. Right? Most importantly, we're not SEBI authorized investment advisors, nor are we advising you to invest in a small cap, medium cap, or large cap. This is something of just academic interest for me and Sashwath, which we're sharing with you. If you find this information interesting, please do your due diligence. Talk to an advisor, talk to your investment partner, professional, and find out what is the right fit for you.
Yes.
Again, thank you for joining us today on Be Rich. Please do subscribe to our channel and turn on the bell notification icon, and do subscribe and share our videos with your friends and family if it's something you think they would be interested in watching. Thank you again for joining us today on Be Rich.
Thank you.
I will be in Kuala Lumpur, Malaysia on the 11th of June this year. That is a Sunday. I want to meet you guys at Sheraton Imperial Hotel between 4 p.m. and 7 p.m. on that day. The Sheraton Imperial Hotel is in Jalan Sultan Ismail area near Quill City Mall. The Kuala Lumpur monorail railway station is available nearby. You can meet me there. For further details, you can contact us on the WhatsApp number below or send us an email at the email given below. My team will contact you at the earliest. It's a great privilege and honor that so many of you in thousands have subscribed to my channel and have supported me. I have written 2 books in English, The Alchemy of Money and Ordinary Stocks, Extraordinary Profits. These books are published by us and are ready. If you want to procure a copy, send us a message to the WhatsApp number given below and my team would respond to you. If you want an Amazon Kindle copy, you can click the link below. Finally, those who wish to consult with me can send a mail to berichenglish@gmail.com. Once again, I thank you for your support. If you like this video, press the subscribe button of my channel, hit the like button and turn on the bell notification.